Shares in Australia's biggest building products company slumped 5% today, despite a big rebound in earnings. Boral turned last year's loss into a full-year profit of $168 million. But investors are concerned Boral is paying too much to take full control of an Asian plasterboard joint venture. They also worried about the company's gloomy outlook for housing, both here and in the US. Tracy Kirkland reports.
Severe weather conditions and depressed housing markets in the United States and Australia certainly took the gloss off Boral's return to the black. The full-year result of $168 million was in line with analysts' expectations and turns around last year's loss of $91 million. Revenue increased by just over 4% to $4.68 billion. And despite housing's poor performance this year, the company remains confident the American residential market is ripe for the picking.
This is only the third time in history that North American housing starts have been below 1 million. So we've now seen 4 years of half that number. The operational leverage and gearing for the business, once it gets above that million number, is phenomenal. So we've got great market positions.
But some fund managers don't share that optimism.
They're working on numbers suggesting 750,000 by the end of the year. I think that's probably a little bit optimistic given the circumstances that it's facing the US at the moment.
In any case, Boral has other ideas. It's aiming to cement its place in the Asian construction market, announcing it's bought out joint venture partner Lafarge to take full ownership of its Asian plasterboard business. Currently, that business has 20 manufacturing plants in 8 countries.
Great business, leadership market positions right throughout Asia. It's been growing at better than 10% compound growth per annum, fantastic legs to grow beyond that. And it's an opportunity for us to provide a beachhead into Asia with a great distribution, great logistics backcloth as a basis for starting that growth.
The price tag of $530 million.
And if you look at the two markets, the two geographical regions, Asia and the US, Asia is in a much better shape. So that's probably, to me, a more positive move, and maybe that's where they're looking to sort of direct the businesses in the longer term. So I think it's a good start. I think the issue there is whether or not they paid the right price for the business.
That's a big bite for them. And given that the existing business isn't growing all that well, it's counter-cyclical and it demands a bit of a leap of faith on behalf of the existing investors. It's a leap I'm not prepared to make at the moment.
The market agreed. Boral shares plummeted over 6% on the news, but Boral isn't perturbed.
Oh, look, I think it's very difficult to find quality assets with market positions like this, and when you do find them, of course, the prices that are expected are very high.
By the end of trading, shares had clawed back slightly, finishing at $3.69, down 5%.
I suppose the bad thing from a professional fund manager's point of view, it's still very expensive. It's on 15 times earnings and a yield of just under 4%. That's too expensive for me to buy it for my clients.
As for the next financial year, Boral says the outlook is hard to determine, but is banking on improvements in the weak residential market in the second half of 2012.